Hello everyone, I am Rakshith Pai and this is Stock Market Basics. Today's topic includes what is a depository, who are the depository participants and how do they serve us, the investors. Also a brief note on SEBI and broad market index such as NIFTY and SENSEX. So what is a depository? Depositories are like bank wallets for your securities, meaning that if you buy shares from any demat account, these depositories will have them safeguarded in your name. Your demat accounts such as Zerodha, Upstocks, etc. do not have your shares. They just show them to you as they are shown to them by the depositories. Depositories store all your financial assets including electronic or demat version of your stocks, bonds, mutual funds, exchange traded funds, that's ETF, and certificate of deposit, etc. Basically, there are two types of depositories in India. Number one, National Securities Depository Limited, NSDL, and number two, Central Depository Service India Limited, CDSL. These depositories have their own registered depository participants or DPs, just like banks have their own branches. They serve as the depositories agents. For example, Zerodha, Upstocks or any other demat service providers are called depository participants. And with the help of these DPs, you and I can buy and sell securities. Nowadays, thanks to discount brokerage such as Zerodha and Upstocks and others, each and every individual can easily buy and sell shares in the Indian stock market with ease. And that is the reason many young Indians are coming into the stock market. Whether it is NSDL or CDSL doesn't matter to us. All you need to know is that you need demat account to trade or invest in Indian securities. Moving on, now that you know what depositories and their participants are. But what is stock market? What are Nifty 50 and SENSEX 30? We call it broad market or indices. There are many indices in the Indian market, but two prominent ones are Nifty 50 and SENSEX 30. The 50 largest Indian firms listed on National Stock Exchange make up the benchmark Nifty 50 index, which measures the performance of the Indian market. It is one of India's two primary stock indices, along with BSE SENSEX. Now, SENSEX includes India's 30 largest companies listed on Bombay Stock Exchange. These are the two indices that guide market sentiment. So when someone says market is falling, it's pretty much that these two indices are falling and vice versa. Such is their influence because they house some of the finest companies to ever rule the Indian stock market. It includes names such as Reliance Industry, HDFC Twins, Infosys, TCS, Bharti Airtel, etc. So basically the stock market is a place where you buy and sell shares listed on the Indian stock market. That makes sense, right? Well, if it doesn't, then we have SEBI to look after. SEBI stands for Securities and Exchange Board of India. It's a board constituted by the central government in 1988 to look after various aspects of Indian stock market. SEBI is a regulatory body that controls Indian security market, and one of the major functions of SEBI is to protect the interest of investors. That's you and me. If you are a new investor, make habit of visiting NSE, BSE and SEBI websites. It's the mother of all information that's concerning the companies listed on Indian stock market. Any and all listed companies, any changes that takes place, they, in the sense the companies, must intimate the same to the SEBI and their respective exchanges such as NSE and BSE. Trust me on this. You as an investor must know what these changes are. So make habit of visiting these websites once in a while. So that's all about today's basics on stock market. A lot more topics to discuss. We'll explain it all here on this channel. Subscribe to this channel and click on the bell icon to get instant notification. Thank you for watching.